Welcome to the Hurst Trading Room for the 3rd of December 2012. This is our summary video about the trading that we've been doing using the FLD trading strategy in the Hurst Trading Room. And as always, please take a look at these disclaimers. Make sure that you understand them. They are important. And let's take a look at the markets. We have been making some profitable trades in the Hurst Trading Room. In fact, of the 4 instruments that we have been discussing and tracking in the Hurst Trading Room, every single one of them is in a profitable trading opportunity, and in fact our stops on our remaining trades have moved up into profitable territory. So the worst thing that can happen now is that we make a profit. We aren't taking any risk on our instruments at the moment. So here's a quick summary, and you can look at the detailed videos to understand more of the detail. First of all, here is the S&P 500, which, as you know, we entered a long trade. This was an A category trading opportunity. As price crossed above the 20-day FLD, in fact, we entered the trade the day after it crossed the FLD, because it crossed the FLD on the Monday. And as you probably know by now, we are cautious of trading on a Monday. So we entered the trade on the Tuesday, and you can see we entered at this level. Our first T1 target was hit on Friday, 3 days after entry. The 4th day of our trade, our T1 target was hit, and last week I spoke about how I expected the cycle shape to bring price back down to the 10-day cycle trough, and I expected price to carry us up to a higher level and thereby take out our T2 target, which it did on Thursday of last week. There's our T2 target, which means that we have only one trade which is still open in the S&P 500. That is nicknamed our lottery trade, because it is the trade that brings us in big profits occasionally when the markets exceed our expectations. And we set a 3-bar trailing stop on that trade, but at present we're not in fact implementing the 3-bar trailing stop, because we have a stop set a little bit higher at the level of the 20-day FLD. Remember, that level of the 20-day FLD is very important to us, and if price comes back down to there, we want to be out of this trade, because our A category trading opportunity will be over. In the detailed video I discuss why one might not want to exit at the level of the FLD, but it's my personal preference to always exit at the level of the FLD. However, we will not be entering a short trade at that point, because this is an A category trade and next is a B category trade, and a B category trade is a short trade. It's a trading opportunity for a short trade, which I very rarely take, because we don't want to enter B category trades unless the prior trough was a straddle trough. So I mentioned that as well in the detailed video. That's the S&P 500. Let's have a look at the Nasdaq, the other US market that we trade. We are also enjoying a very profitable A category trading opportunity in the Nasdaq. There it is, because of course price is bouncing up out of the 20-week cycle trough, which we believe occurred on the 16th of November. We entered this trade also on the Tuesday. Our T1 target was hit, and we exited from our trade 1. Our T2 target was hit eventually last week on Thursday. There it is, T2 target. So we exited from our trade 2 at that point, and also raised our stop loss up to the break-even level, which is the level of entry. Now, of course, we have implemented the 3-bar trailing stop, which is now at this level over here. And we are also in only one trade on the Nasdaq, our lottery trade, our trade 3, and that stop loss level will be adjusted, of course, as the market action unfolds, and we are implementing our 3-bar trailing stop on that trade. Next would be a B category trading opportunity. Again, not a trade that I want to take, so I will not be entering a short trade. But as discussed in the detailed video, there is a very small possibility that in fact the B category interaction occurred last week, and we are now in a C category trading opportunity. I discussed that in the detailed video. I don't think it's very likely, but there is a very outside chance that that might have happened. So I discussed that in the detailed video. But that's the Nasdaq. We're enjoying a good profitable trading opportunity there. Let's take a look at the euro to US dollar. The euro to US dollar is also in a profitable trade, and as you know, we entered this trade on the basis that this trough that formed on the 13th of November was a trough of 40-day magnitude. In the detailed video, I discussed the fact that I now believe that this was in fact a trough of 20-week magnitude. So we entered an E category trade over here. We entered it on the Monday at that level over there, and it now looks as if though the trade that we thought was an E category trade is in fact also an A category trade. There's no problem with that. We got into the right trade at the right time, so that was good news. Our T1 and T2 were both at reduced levels, and we exited from those trades in the first week of our trading. Over here, the reason why they were at such low levels, T2 was slightly above T1 if I remember correctly. The reason they were at such low levels was because of the very low level of the actual price cross, which occurred over the weekend. It's an unfortunate thing, but when price crosses an FLD over the weekend, we don't know with absolute certainty the level of that price cross, and so often we get reduced targets because of it, and this is one of those cases. But nevertheless, despite taking a low profit from our trade 1 and our trade 2, we did take profits from both of those trades, and we are now in our trade 3 only, and we have implemented a 3-bar trailing stop. Our 3-bar trailing stop is down here. There's our 3-bar trailing stop, and I am also exiting at the level of the 20-day FLD, a very important level for us. We always watch the level of the 20-day FLD. So there is that level. So our stop loss at the moment in the euro to US dollar is at the level of the FLD. If the 3-bar trailing stop climbs above that level, then of course we will use the 3-bar trailing stop. Again, I am not considering entering a short trade when price comes down to the 20-day FLD, because I now believe that we are in an A category trading opportunity. And next is a B category short trade, and I'm not going to be taking it because I very rarely take a B category short trade, as you should know by now. So that is what I believe is happening in the euro to US dollar. Again, it is possible that this trough over here was a trough of the 20-day cycle. It is more possible, in fact, than it is in the US markets. So that might have been our trough of the 20-day cycle, which means that we have already seen our B category interaction over here, and we are already in the C category long interaction, and therefore the next interaction will be a D category short trade. Okay, that might be unfolding, and there's a higher likelihood of that unfolding in the euro to US dollar than there is in the US stock markets. But I'm not jumping into that trade yet. I'm going to keep a careful eye on it, and next week I suspect we will be discussing entering a short trade into the euro to US dollar, a D category short trade, I suspect. But we don't do anything impulsively, of course. We watch things carefully and we watch the markets unfold. So in the detailed video I discussed that as well. Then let's take a look at the British pound to US dollar. There really isn't very much more to say at this point. The British pound to US dollar is also enjoying a profitable A category trading opportunity. Here is the price cross. It occurred 2 days later than the price cross in the euro to US dollar. This is, of course, an A category trade as price bounces out of the 20-week cycle trough, which occurred in this market on the 15th of November. And again, it is possible that this is a trough of the 20-day cycle, which is expected, according to this circle and whiskers, this nest of lows is expected sometime this week. But it is possible that it occurred last week, so we might have seen our B and then C category interaction. But I wouldn't be surprised to still see a bit of B and then C category interaction, with price coming down to the 20-day FLD and then bouncing back up again. We have implemented our 3-bar trailing stop in the British pound to US dollar. Here it is over here, and that's our 3-bar trailing stop in the British pound, and so that is protecting our profits on our trade 3. Let's quickly summarize this. Those are our 4 instruments that we're following in the Hurst trading room. Let's summarize this by taking a look at our spreadsheet and writing down what our situation is. Let's just take stock and summarize the situation. Okay, here is our spreadsheet, and as you know, I change the background color of a row when I enter a trade. When I enter a trade and it is still open, I change the color to this blue color here. A green background color is for trades that are not open yet and I'm still considering. That's all those areas there. And this sort of orangey color is the color that I change to the background to when a trade exits, either for a profit or a loss, and I have a trading opportunity which still has an open trade in it and it has some closed trades in it, which is of course the situation with all 4 of our instruments. So let's take a look at our profit loss situation. Here's the euro to US dollar. This is the long trading opportunity that we entered in the euro to US dollar. And if we add up the profits from the 2 trades that we have already exited, trade 1 and trade 2, we've exited those trades, we've taken the profits, they're in our pockets already. And of course, trade 3, we have set a stop loss level, and there is that stop loss level. I've put it into the spreadsheet. So worst case scenario, if this market turns around and takes us out at our stop loss level, we will on trade 3 exit with a profit of $359, and our total profit for the euro to US dollar trade would have been an amount of $665. Okay, if you add up those numbers, you get $665. The Nasdaq is the next one in my spreadsheet. I don't know why the spreadsheet is ordered like this, but here's the next trade in the spreadsheet. The Nasdaq, again, trade 1 and trade 2 have been exited. I have pocketed those profits. I've kept them for myself. Trade 3, we have a stop loss level of 26.1175 set. So worst that'll happen is we take a profit of $64. So we're not going to take any loss on the Nasdaq. Total amount of money we've made out of our Nasdaq trade is $466. 466. So that's good. Our S&P 500, I won't repeat the whole thing all over again, but we have only 1 trade open in the S&P 500. And in the S&P 500 trade, we have made a profit of 479. You can see we're making a lower profit in the Nasdaq and the S&P 500 than we are in the euro to US dollar, and part of that is because those markets are so closely correlated, and I reduced the amount of risk I was taking because of that. But of course, both of them together are giving us a nice healthy profit. The British pound to US dollar, I entered a fairly low risk trade in the British pound to US dollar because I was not convinced about what was happening in the British pound to US dollar at the time that I entered the trade. So you might remember I reduced my risk by entering a smaller trade. Nevertheless, we are making a good profit out of that trade at the moment. $468, and that is assuming that our trade 3 turns against us and heads straight down to that stop loss level, which we will be adjusting every single day of this week. So we're in a really good situation in the Hurst trading room at the moment. We're taking a guaranteed profit of $2,079. Okay, that's a really good position to be in. What is our risk? At the moment, we're not risking anything. Okay, that is guaranteed profit, assuming that our 4 open trades turn against us and go down to their stop loss levels. In the course of the week, we will be adjusting our stop loss levels, and we will be hopefully locking in even more profit. Eventually, of course, those trades will exit. Okay, they will turn in the opposite direction, start moving downwards, move down to our stop loss levels, and we will exit from those trades. But we have made some very healthy profits there, trading only these 4 instruments. That concludes the summary for today's Hurst Trading Room videos. Take a look at the detailed videos if you have time for a detailed discussion about exiting from each one of these trades and consideration for the next trades that we might be taking in these particular instruments. Either a C category long trade or possibly a D category short trade, which might be the next trading opportunity that we find presented to us as the markets unfold. As always, I invite you to please put some comments in the comment box. Let us know if there are unanswered questions, if there are things that you need to know that I'm not telling you. And I wish you profitable trading this week, and I look forward to seeing you later this week or next week in the Hurst Trading Room.